Welcome to the BlueScreen podcast, and this is episode 2. We're going to be talking about something that I like. This episode is specifically for you blue screeners. This is for you blue screeners, people who are watching those blue screeners. Also you red screeners too, people that have not figured this thing out yet, that are still figuring it out. And you can tune in too, so you can grab some tools that you can put under your tool belt and figure your trading out, And I'm not gonna lie, today was a terrible trading day. I'm not gonna lie, I hated. I took 3. Did I take 3 losses? I'm currently in one trade. I'll see how that pans out. I'll drop that in the comment section. And tell me also about how your trading day went. It's only fair. I told you, you should tell me too, And anyway, today I'm going to be talking about what institutions think of gold going into February. I think I'm going to start making this a series for every beginning of the month. What I think about fundamental catalysts that play into trading. Well, I'm actually a day trader, even though I swing trade sometimes, and some of my trades might turn into swings depending on different catalysts, different confluences and whatnot. So, well, at least in my trading, I do apply fundamentals, but I don't use them to trade. I will never take a trade because the fundamentals say that the economy might go down. Because I think about it this way, right? Fundamentals kind of give you the direction of where the market might probably go, but also the charts kind of give you the psychology behind the traders that are doing. Every time you look at a chart, keep in mind that you're looking at mass psychology of a lot of people. It's hard to predict what one individual investor might do, but it's not really that hard if you think about it to predict what a lot of investors might do, And so I'm going to be talking about the fundamental side today, not the technical side. I think I'm going to have to make kind of like a segment where I break down the chart, like actual screens, because here I am talking about blue screens, but you've never seen my screens, That's something for the future though. And let's talk about the first catalyst that goes into gold. Well, I trade gold and only gold. So the first catalyst is the US dollar, because I do not trade gold in the overall market where it's weighed against the pound or against the euro. I traded it weighed against the dollar, so which makes sense why I look at the dollar as a catalyst for my trades. And right now the dollar is in a weird space with the interest rate decision being projected to come out lower in the month of March, which I'm gonna actually get deeper into that. I'm gonna comment down below and say go deeper, And let me talk about that, the interest rate decision. And every country's financial thing is kind of based on the interest rates, right? So, and what affects the interest rate, which is inflation and the overall stability of the economy, Usually when an economy is not doing too bad, they raise rates in order to get more people to invest into that currency, which thus brings the currency to go up. And once they ease on that investment, once they ease on that interest rate, obviously everybody wants higher returns on their investment, which is exactly what an interest rate is, so to speak, And right now the dollar is in a place where it was in a tough space, I think, since, if I'm not mistaken, because I wasn't trading in 2008, but there was the pandemic. But somehow they ended up having to raise rates to where they are, which is 550 right now, but they're projected to cut rates because the economy is starting to behave a bit better right now. Well, what's this going to do to gold? If they cut rates and then the dollar falls, that's going to lead to gold going up, even potentially up to those all-time highs, which everybody wants. But I really don't want all-time highs because I'm a day trader, mind you, which means that if and hopefully not, God forbid, it happens that we reach those all-time highs, I cannot get those high risk to reward trades because I don't have levels at the all-time highs to target, which means I'm gonna have to settle for my 1:3 or my 1:2 risk to rewards, whereas I usually get those 1:5, 6, even 10. Sometimes it happens, but 10 is rare, but usually it goes up to 5, 6, 7, so I kind of don't want the interest rates to go up, but I don't make my analysis based on what I want. I make my analysis on what is happening right now, and what is happening right now is that, well, the Fed chair, the economy right now is starting to behave a whole lot better. So the Fed chair came out and said that, well, his tone in the meeting sounded kind of like, I don't really think this is what he sounded like. He sounded like he says he does not really think it's a good idea to kind of cut rates right now, because also cutting rates could go badly too. It could lead to a recession. If they cut rates too early or too late, it might lead to a recession. So they kind of have to be careful when they cut rates, because there are many hungry institutions ready to short that dollar because they don't care about this dollar. They just want to make money, just like us. Unfortunately, that's just part of the game. It's an occupational hazard, and there's also the second catalyst, which is the wartime catalyst. Right now we're in a very weird place globally, and right now, how gold reacts to negativity in the world, which is like war and stuff like that, diseases like the pandemic. We saw gold surge up when the COVID-19 thing happened. Am I allowed to say that? Yeah, that happened. C19, whatever you want to call it. When that happened, we saw gold surge up, because gold, when people are scared, they usually like to keep gold as like a backup. And I'm gonna talk more about that with the last catalyst, the third catalyst, which is Bitcoin. That's far-fetched. Actually, I'm gonna talk about that last because it's so far-fetched. And so right now we're experiencing war in Gaza-Israeli war, and Russia-Ukraine. I'm not sure if they settled it, because I don't like to look at too much negative news. I kind of know what's happening, but I never really try to figure out the details because I don't like that negative things, It's kind of too negative for me. So, but so far, these two wars, and usually in the past when this happens, I think also it's because there are more investors coming into the investment world right now. I think we at record highs of black investors. I think we should clap for that, actually. And so which kind of affects the psychology of traders, because back in the day, if there were two wars, gold would have been for sure making all-time highs, but it kind of ignored the news and focused and responded more to the dollar these days. Just like right now, it's going down because the dollar has been receiving a lot of bullish news. Even today, came out the jobless claims, and they came out good actually. Not crazy good, but good. They were better than expected, and this caused the dollar to go up. And CPI came out. Why was it CPI, or was it non-farm? Yeah, NFP. Yeah, Friday. I remember NFP. Yeah, it was Friday. I remember NFP because I was trading before NFP, but then I got taken out of my trade for a profit. TP hit before non-farm payroll came out. And I don't know, I'm kind of putting this catalyst on pause for now because it seems to be having no effect on the markets. So I'm kind of gonna put that in the back of my mind rather than like trade that catalyst. And then the last catalyst, which is more like a fun one. This is far-fetched, but you know how Nipsey Hussle said large profit margins on the long shots. This is a long shot, but it might or it might not be a good thing to keep in your mind. Well, people are saying right now that Bitcoin is going to replace gold. That's what they're saying. In terms of like, how, and it makes sense also because, well, I'm not for it or against it. I'm just looking at it. It makes sense because like right now the wartime catalyst does not seem to be affecting gold too much, but I saw that, I don't know whether it is related or not, but Bitcoin seems to be moving higher, and I don't know whether that's because of the wartime thingy. And so basically what they're saying is that institutional players raised gold up to all-time highs only to take out those all-time highs and get those discounted prices, those premium prices at the all-time highs, so that they can start a short on gold, because their narrative on gold is that it's going to get replaced. And even if it does get replaced though, I don't see gold dying out forever, because there are still other uses for gold besides it being a safe haven. Essentially, gold can be like, it's a very stable thing, and there are also other uses for gold, like technologies and whatnot. It is a precious metal after all, for a reason, and I can actually see either way it coming down and not actually being affected for too long, but I can see it going down a significant amount, at least 50%. I can see it doing that. But either way, man, where the market trades, I'm watching these catalysts, but I'm kind of like 80-20. I'm 20% fundamental and 80% technical, because right now, even if things happen and I see a technical indication that I should take a trade, I'm going to dwell on that more than I'm going to take the fundamental thing. I use the fundamentals more like to gauge where because institutions, even though like we say that the market is run by algorithms and whatnot, I'm not for that or against that, but I understand why that could be said. But at the same time, I'm like, institutions like, even if they are using algorithms, they're gonna first look at fundamentals to see where they should take price, because it would make no sense if right now certain things happen to the dollar and the dollar keeps going up. People are gonna ask, what's going on actually, So I'm keeping that in mind, and you should too, as we go on, man. That's all I have for this episode. Let's rock on. Let's keep on trading, man. Let's keep achieving those blue screens, and I wish you all the blue screens in the world.